I think that OpenAI is likely going to be the next multi-trillion-dollar hyperscale company.
Okay. Jensen, great to be back, of course, with my partner, Clark Tang. I can't believe it's
Welcome to NVIDIA.
Oh, and nice glasses. Those actually look really good on you. The problem is now everybody's going to want you to wear them all the time. They're going to say, where are the red glasses? Yeah, I can vouch for that. So it's been over a year since we did the last pod.
Yeah.
Over 40% of your revenue today is inference. But inference is about ready because of chain of reasoning.
Yeah.
Right?
It's about to go up by 1 billion times.
Right. By a million X, by a billion X.
That's right. That's the part that most people haven't completely internalized. This is that industry we were talking about, but this is the Industrial Revolution.
Right.
Honestly, it's felt like you and I have had a continuation of the pod every day since then. In AI time, it's been about 100 years. I was rewatching the pod recently, and the many things that we talked about that stood out. The one that was probably most profound for me was you pounding the table. That, remember at the time, there was kind of a slump in terms of pre-training. And people were like, "Oh my God!"
The end of pre-training,
right? The end of pre-training. We're not going. We're overbuilding.
Yeah,
this is about a year and a half ago.
Yeah,
and you said inference isn't going to 100x, 1,000x. It's going to 1 billion x, which brings us to where we are today. You announced this huge deal. We ought to start there.
I underestimated. Let me just go on record. I underestimated. We now have 3 scaling laws, right? We have pre-training scaling law. We have post-training scaling law. Post-training is basically like AI practicing.
Yes.
Practicing a skill until it gets it right. And so it tries a whole bunch of different ways. And in order to do that, you've got to do inference. Yes. So now training and inference are now integrated in reinforcement learning. Really complicated. Yeah. And so that's called post-training. And then the third is inference. The old way of doing inference was one shot.
Right. But
the new way of doing inference, which we appreciate, is thinking. So think before you answer.
Yeah.
And so now you have 3 scaling laws. The longer you think, the better the quality answer you get. While you're thinking, you do research, you go check on some ground truth, and you learn some things, you think some more, you go learn some more, and then you generate an answer. Don't just generate right off the bat. Right. And so thinking, post-training, pre-training, we now have 3 scaling laws, not 1.
You knew that last year, but is your level of confidence this year in the inference is going to 1 billion x and where that will take the levels of intelligence, is it higher? Are you more confident this year than you were a year ago?
I'm more confident this year. And the reason for that is because look at the agentic systems now.
Right.
And AI is no longer a language model, and AI is a system of language models. And they're all running concurrently, maybe using tools. Some of us using tools, some of us doing research, and there's a whole bunch of stuff.
Okay,
and it's all multimodality, and look at all the video that's been generated. I mean, it's
incredible,
crazy stuff. Yeah,
it really brings us to kind of the seminal moment this week that everybody's talking about, the massive deal you announced a couple of days ago with OpenAI Stargate, where you're going to be a preferred partner. Invest $100 billion in the company over a period of time. They're going to build 10 gigs. And if they used NVIDIA for those 10 gigs, that could be upwards of $400 billion in revenue to NVIDIA. So help us understand, just tell us a little bit about that partnership, what it means to you, right? And why that investment makes so much sense for NVIDIA.
So first of all, I'll answer that last question first.
Okay,
and then I'll come back and present my way through. I think that OpenAI is likely going to be the next multi-trillion-dollar hyperscale company.
Okay.
I think you and I.
Why do you call it a hyperscale company?
Hyperscale, like Meta's a hyperscale.
Yeah.
Google's a hyperscale.
Yeah.
They're going to have consumer and enterprise services, and they are very likely going to be the world's next multi-trillion-dollar hyperscale company.
Yes.
And I think you would agree with that.
I agree.
If that's the case, the opportunity to invest before they get there, this is some of the smartest investments we can possibly imagine. And you got to invest in things you know.
Right.
And it turns out we happen to know this space. And so the opportunity to invest in that, the return on that money is going to be fantastic. So we love the opportunity to invest. We don't have to invest.
Right.
And it's not required for us to invest, but they're giving us the opportunity to invest. Fantastic thing. Now let me start from the beginning. So we're partnering with OpenAI in several projects. The first project is the build out of Microsoft Azure, and we're going to continue to do that. And that partnership is going fantastically. We have several years of build out to do hundreds of billions of dollars of work just to do there.
Right.
The second is the OCI build out. And I think there's some 5, 6, 7 gigawatts that are about to be built out. And so we're working with OCI and OpenAI and SoftBank to build that out.
Right.
Those projects are contracted. We're working on it. Lots of work to do. And then the third is CoreWeave, right? And so all of CoreWeave 4, I'm talking about OpenAI still.
Yes.
Okay. Everything in the context of OpenAI. And so the question is, what is this new partnership? This new partnership is about helping OpenAI, partnering with OpenAI to build their own self-build AI infrastructure for the first time.
Right.
And so this is us working directly with OpenAI at the chip level, at the software level, at the systems level, at the AI factory level, to help them become a fully operated hyperscale company. I mean, this is going to go on for some time. It's going to supplement the amount of, they're going through 2 exponentials, as you know.
Right.
The first exponential is the number of customers is growing exponentially.
Right.
And the reason for that is the AI is getting better, the use cases are getting better, just about every application is connected to OpenAI now. And so they're going through the usage exponential. The second exponential is the computational exponential of every use.
Yes.
Right?
Yes.
Instead of just a one-shot inference, is now thinking before it answers. Yes. And so these 2 exponentials compounding their compute requirements. And so we got to build out all these different projects. And so this last one is an additive on top of everything that they've already announced, all of the things that we're already working on with them. It's additive on top of that. And it's going to support this incredible exponential.
One of the things you said there that's really interesting to me is kind of, they're going to be high probability, multi-trillion-dollar company in your mind. You think it's a great investment. At the same time, they're self-building. You're helping them self-build their data centers. So heretofore, they've been outsourcing to Microsoft to build the data center. Now they want to build full stack factories themselves.
They want to basically have a relationship with us the way that Elon and X has a relationship.
Correct.
I mean, Elon and X self-built.
Exactly. But I think that's also,
this is a very big deal.
When you think about the advantage that Colossus had.
Yeah.
They're building full stack. That is a hyperscaler. Because if they don't use the capacity, they could sell it to somebody else.
That's right. Yeah.
In the same way, Stargate, they're building monstrous capacity. They think they'll need to use most of it, but it puts them in a position to sell it to somebody else as well. It sounds very much like AWS or GCP or Azure. That's what you're saying.
Yeah. I think they'll likely use it themselves. And just in the case of X, they'll likely use it themselves.
Right.
But they would like to have the same direct relationship with us, direct working relationship and direct purchasing relationship. Meta, just as what Zuck and Meta has with us, it's exactly a direct. Our relationship with between us and Sundar and Google, direct. Our partnership with Satya and Azure, direct. Isn't that right? And so they've gotten to a large enough scale that they believe it's time for them to start building these direct relationships. I'm delighted to support that. And Satya knows it, and Larry knows it, and everybody's aware of what's going on, and everybody's very supportive of it.
So one of the things I find mysterious, right? You just mentioned Oracle, $300 billion, Colossus, what they're building. We know what the sovereigns are building. We know what the hyperscalers are building. Sam's talking in terms of trillions. But of the 25 sell-side analysts on Wall Street who cover your stock, if I look at the consensus estimate, it basically has your growth flatlining starting in 2027. 8% growth, 2027 through 2030. Okay? That is the 25 people and their only job. They get paid to forecast the growth rate for NVIDIA. So clearly,
we're comfortable with that, by the way.
Right.
Look, we're comfortable with that. Okay, we have no trouble beating the numbers on a regular basis.
Right.
Okay.
No, I understand that, but there is this interesting disconnect.
Yeah.
Right. I hear it every day on CNBC and Bloomberg, and I think it goes to some of these questions around shortages leading to a glut that they don't believe. They say, okay, we'll give you credit for 26, but 27, maybe we'll have too much and you're not going to need that. But it is interesting to me, and I think it's important to point out that your consensus forecast is that this won't happen, right? And we also put together a forecast, for the company. taking into account all of these numbers. And what it shows me is still, even though we're 2.5 years into the age of AI, a massive divergence of belief between what we hear Sam Altman saying, you saying, Sundar saying, Satya saying, and what Wall Street still believes. And, again, you're comfortable with that.
I also don't think it's inconsistent.
Okay, so explain that a little bit.
So first of all, for the builders, we're supposed to be building for opportunity.
Right.
We're builders. Let me give you 3 points to think through. And these 3 points, it'll help you, hopefully, be more comfortable with NVIDIA in this future. So the first point, and this is the laws of physics point. This is the most important point, that general purpose computing is over, and the future is accelerated computing and AI computing.
Yeah.
That's the first point. And so the way to think about that is there's how many trillions of dollars of computing infrastructures in the world that has to be refreshed.
Right. And when it gets refreshed, it's going to be accelerated computing.
That's right. And so the first thing you have to realize is that general purpose computing, and nobody disputes that. Everybody goes, yeah, we completely agree with that. General purpose computing is over. Moore's law is dead. People say these things. And so what does that mean? So general purpose computing is going to go to accelerated computing. Our partnership with Intel is recognizing that general purpose computing needs to be fused with accelerated computing to create opportunities for them. Is that right? And so 1, general purpose computing is shifting to accelerated computing and AI. 2, the first use case of AI is actually already everywhere.
Right.
It's in search, recommender engines. Isn't that right? In shopping. The basic hyperscale computing infrastructure used to be CPUs doing recommenders, is now going to GPUs doing AI.
Right.
So you just take classical computing, it's going to accelerated computing and AI. You take hyperscale computing, it's going from CPUs to accelerated computing and AI. And then now that's the second point. Just feeding the Metas, the Googles, the ByteDances, the Amazons, and take their classical, traditional way of doing hyperscaling and moving into AI, that's hundreds of billions of dollars.
And because that may be 4 billion people on the planet today, if you take TikTok, Meta into account, Google into account, who are already demanding workloads that are driven by accelerated computing.
That's exactly right. And so without even thinking about AI creating new opportunities, it's about AI shifting how you used to do something to the new way of doing something. Okay. And then now let's talk about the future. So far I've only spoken kind of largely about just mundane stuff. Just mundane stuff. The old way is now wrong. You're no longer going to use fuel light lanterns. You're going to go to electricity. That's all.
Right.
Okay. And you no longer, prop planes. You're going to go to jets. That's all. And so, so far, that's all I've talked about. And then now that the incredible thing is when you go to AI, when you go to accelerated computing, then what happens? What are the new applications that emerge as a result? And that's all the AI stuff that we're talking about.
Yeah.
And that's that opportunity. What does that look like? Well, the simple way of thinking about that is where motors replaced labor and physical activity, we now have AI, these AI supercomputers, these AI factories that I talk about. They're going to generate tokens to augment human intelligence, right? And human intelligence represents what, 65% of the world's GDP, let's call it $50 trillion. And that $50 trillion is going to get augmented by something. And so let's come back to a single person. Suppose I were to hire a $100,000 employee and I augmented that $100,000 employee with a $10,000 AI. Yes. And that $10,000 AI, as a result, made the $100,000 employee twice more productive, 3 times more productive. Would I do it? Heartbeat. I'm doing it across every single person in our company right now, right?
They all have co-agents.
That's right. That's right. Every single software engineer, every single chip designer in our company already has AIs working with them. 100% coverage. Yeah. As a result, the number of chips we're building is better. The number is growing. The pace at which we're doing it is right. And so we're growing faster as a company. As a result, we're hiring more people. Our productivity is greater. Our top line is greater. Our profitability is greater. What's not to love about that? Now, apply the NVIDIA story to the world's GDP. And so what's likely to happen is that $50 trillion is augmented by, let's pick a number, $10 trillion. That $10 trillion needs to run on a machine. Now, the reason that AI is different than IT in the past, in a way, software was written a priori, and then it runs on a CPU. And a person would operate it. In the future, of course, AI is generating tokens, but a machine has to generate the tokens and it's thinking. So that software is running all the time. Whereas in the past, the software was written once. Now the software is in fact writing all the time. It's thinking. In order for the AI to think, it needs a factory. And so let's say that $10 trillion of token generated, 50% gross margins, and 5 trillion of it needs a factory, needs an AI infrastructure. So if you told me that on an annual basis, the CapEx of the world was about $5 trillion, I would say the math seems to make sense. And that's kind of the future, right? Going from general purpose computing, accelerated computing, replacing all the hyperscales with AI, and then now augmenting human intelligence for the world's GDP.
And today that market is our estimate is about 400 billion annually. So the TAM, is a 4 to 5x increase over where it is today.
Eddie Wu at Alibaba said between now and the end of the year, now and the end of the decade, they're going to increase their data center power by 10x. You just said how much?
4x.
There you go.
There you go.
They're going to increase power by 10x. And we correlate the power. NVIDIA's revenue is almost correlated to power. Isn't that right?
That's right, because
another thing, what else did he say? He said token generation is doubling every few months. What's that saying? The perf per watt has to keep on going exponentially. That's why NVIDIA is like cranking it out with perf per watt. And revenue per watt is, watt is basically revenues in this future.
Embedded in this assumption, I find it very fascinating in historical context. For 2,000 years, basically GDP did not grow. Okay? And then we get the Industrial Revolution, GDP accelerates. We get the Digital Revolution, GDP accelerates. And it basically what you're saying, and Scott Besson has said it. He said, I think we're going to have 4% GDP growth next year. Basically what you're saying is the world's GDP growth is going to accelerate because now we are giving the world billions of coworkers that will do work for us. And if GDP is an amount of output for a fixed amount of labor and capital, it has to accelerate.
It has to. It has to. Look at what's going on with AI. As a result of the technology of AI, and that technology of AI, let's just call it the large language models and all the AI agents, it's now creating a new industry of AI agents. There's no question about that. Okay, so that's OpenAI is the fastest growing revenue company in history. And they're growing exponentially, And so AI itself is a fast growing industry. Because of AI, needs a factory behind it, an infrastructure behind it. This industry is growing. My industry is growing. And because my industry is growing, the industry underneath it is growing. Energy is growing.
Power, shell,
This is like renaissance for the energy industry, isn't that right? Nuclear energy, gas turbines. I mean, look at all of those companies in the infrastructure ecosystem underneath us. They're doing incredibly well. Everybody's growing.
These numbers have everybody talking about a glut or a bubble, right? Zuckerberg said last week on a podcast, he said, listen, I think it's quite possible at some point that we will have an air pocket and Meta may in fact overspend by $10 billion or whatever. But he said it doesn't matter. It's so existential to the future of his business that it's a risk that they have to take. But when you think about that, it sounds a little bit like prisoner's dilemma, right? And walk us again through.
These are very happy prisoners.
Walk us again through, right? Today, our estimate is that we're going to have 100 billion of AI revenue in 2026, excluding Meta and excluding, the GPUs running recommender engines. Okay. So there's
search or
correct. So there's other stuff. But let's call it 100 billion.
What is that industry anyways? What is the industry already in hyperscale? What is the hyperscales, between
trillions?
Yeah, exactly. By the way, that industry is going to AI. Before anybody starts at zero, you got to start there.
But I think the skeptics would say we need to go from $100 billion of AI revenue in 26 to at least $1 trillion of AI revenue in 2030. Okay? You just were talking a minute ago about $5 trillion when you look at kind of global GDP. If you did a bottoms up, can you see your way to $1 trillion of AI-driven revenues from $100 billion over the course of the next 5 years? Are we growing that fast?
Yes. And I would also say we're already there.
Okay. So explain that.
Because the hyperscalers, they went from CPUs to AI.
Okay.
Their entire revenue base is all now AI-driven.
Correct.
You can't do TikTok without AI.
Correct.
You can't do YouTube Short without AI. You can't do any of this stuff without AI. The amazing things that Meta's doing for customized content, personalized content, you can't do that without AI. It's all of that stuff used to be humans, doing content a priori, creating 4 choices that are then selected by a recommender engine.
Correct.
And now it's infinite number of choices generated by an AI, right?
But those things are already, like we had the transition from CPUs to GPUs largely for those recommender engines. And now they're going...
No, that's fairly new. I would
in the last 3 or 4 years,
yeah,
maybe?
Zuck would tell you, I was at SIGGRAPH, and Zuck would tell you, they were late getting to
for
GPUs.
Sure,
yeah.
for sure.
GPUs for Meta is what, a couple of years?
Okay.
A year and a half? It's pretty new. Search with GPUs?
For sure.
Brand spanking new.
For sure.
Brand spanking new. Search for GPUs on GPUs?
So your argument would be the probability that we're going to have $1 trillion of AI revenues by 2030 is near certain because we're already there. Okay.
Right.
Let's just talk about incremental from where we are
Now
today.
We can talk about incremental.
From where we are today.
Exactly.
Right. As you do your bottoms up or your tops down, I just heard your tops down about percentage of global GDP.
Yeah.
What is the percentage probability that you think we'll have a glut, will run into a glut in the next 3 or 4 or 5 years? Right? It's a distribution of, we don't know the future. It's a distribution of probabilities.
Until we fully convert all general purpose computing to accelerated computing and AI. Until we do that,
yes,
I think the chances are extremely low.
Okay. And that will take a few years.
That'll take a few years.
Yeah. Let me ask one more. And then
until all recommender engines are AI-based, until all content generation is AI-based, because content generation, consumer-oriented content generation is very largely recommender systems and so on and so forth. And all of that's going to be AI-generated. Until all of this stuff, what classically was hyperscale, now transitions to AI. Everything from shopping to e-commerce to, all that stuff until everything goes over.
But all this new build, right, when we're talking about trillions, we're investing ahead of where we are. Is that like at will? Are you obliged to invest the money even if you see a slowdown or a kind of a glut coming? Or is this one of these things that you're just waving the flag to the ecosystem to say, get out and build? And at some point in time, if we see some of this slow down, we can always pull back on the level of investment.
Actually, it's the other way because we're at the end of the supply chain, right? And so we respond to demand.
Okay.
And right now, all the VCs will tell you, you guys know, the demand, there's a shortage of compute in the world. Not because there's a shortage of GPUs in the world. Okay, if they give me an order, I'll build it. Right? Over the last couple of years, we've really plumbed the supply chain. So all of the supply chain behind me, from wafer starts to CoWoS to HBM memories, all of that technology, we've really geared up.
Yeah.
If we need to double, we'll double.
Yes.
Okay? So the supply chain is ready. Now we're just waiting for demand signals. And when the CSPs and the hyperscalers and our customers do their annual plan and they give us, their forecast, we respond to that and we build to that. Now, what's going on, of course, is that every one of their forecasts that they provide us turns out to have been wrong.
Right.
Because they under-forecasted. And so now we're always in a scramble mode. And so we've been in the scramble mode now for, a couple of years. And it's whatever forecast we've been given has been always significant increase from last year but not enough.
Satya last year seemed to be pulling back a little bit, seemed to be, some people called him the adult in the room, tamping down kind of some of these expectations. A few weeks ago, he said, hey, I've also built 2 gigs this year and we're going to accelerate in the future. Do you see some of the traditional hyperscalers that may have been moving a little slower than, let's call it a CoreWeave or Elon X, or maybe a little slower than Stargate? Do you see them all? It sounds like to me, they're all leaning in more now and they're all also
because
accelerating.
of the second exponential.
Okay.
We've already had one exponential we were experiencing, which was the adoption rate of AI, the engagement of AI was growing exponentially.
Yes.
The second exponential that kicked in was reasoning.
Yeah.
That was the conversation we had 1 year ago.
1 year ago.
Yeah. You said, hey, listen, the moment you take AI from one shot, memorizing an answer and memorizing and generalizing, that's basically pre-training.
Yeah.
So memorizing an answer, what's 8 times 8? Just memorize it, okay? And so memorizing an answer and generalizing, that was one-shot AI. Now, a year ago, reasoning came about.
For sure.
Research came about. Tool use came about. And now you're a thinking AI.
1 billion X.
It's going to use a lot more compute.
Certain hyperscale customers, to your point, had internal workloads that they had to migrate anyways from general purpose computing to accelerated computing. So they built through the cycle. I think maybe some hyperscalers had different workloads, so they weren't quite sure how quickly they could digest it.
That's
but
right.
Everyone has now concluded that they dramatically underbuilt.
One of the applications that my favorite is just good old-fashioned data processing. Structured data and unstructured data. Just good old-fashioned data processing.
Yes.
And very soon we're going to announce a very big initiative of accelerated data processing. Data processing represents the vast majority of the world's CPUs today. It still completely runs on CPUs. If you go to Databricks, it's mostly CPUs. You go to Snowflake, it's mostly CPUs. SQL processing at Oracle, mostly CPUs. Everybody's using CPUs to do SQL, structured data. In the future, that's all going to move to AI data. That is one gigantic, massive market that we're going to move to. But you need everything that NVIDIA does requires acceleration layers and requires domain-specific data processing libraries, recipes.
Yeah.
We got to go build that, but that's coming.
So one of the pushbacks, I turned on CNBC yesterday. They were like, "Oh, glut bubble." When I turned on Bloomberg, it was about round tripping and circular revenues. Okay, and so for the benefit of people, at home. These arrangements, or when companies enter into a misleading transaction that artificially inflates revenue without any underlying economic substance. So in other words, growth's propped up by financial engineering, not by customer demand. And the canonical case everybody's referencing, of course, is Cisco and Nortel from the last bubble 25 years ago. So when you guys or Microsoft or Amazon are investing in companies that are also your big customers, in this case, you guys investing in OpenAI, while OpenAI is buying tens of billions of chips, just remind us and remind everybody else, what are the analysts on Bloomberg and otherwise getting wrong when they're hyperventilating about circular revenues or about round tripping?
10 gigawatts is like $400 billion, right?
Yeah.
Something like that. And that $400 billion will have to be largely funded by their offtake, right? Their revenues, which is growing exponentially. It has to be funded by their capital, the money they've raised through equity, and whatever debt they can raise. Those are the 3 vehicles. And the equity that they could raise and the debt that they could raise has something to do with the confidence of the revenues that they could sustain.
For sure.
And so smart investors and smart lenders will consider all of these factors. Fundamentally, that's what they're going to do. That's their company. It's not my business. And of course, we have to stay very close to them to make sure that we build in support of their continued growth. Okay? And so there's the revenue side of it, and it has nothing to do with the investment side of it. The investment side of it is not tied to anything. It's an opportunity to invest in them. And as we were mentioning earlier, this is likely going to be the next multi-trillion-dollar hyperscale company. And who doesn't want to be an investor in that? My only regret is that they invited us to invest early on.
I remember those conversations.
And we were so poor, that we were so poor we didn't invest enough. And I should have given them all my money.
And the reality is, if you guys don't do your jobs and keep up with, if Vera Rubin doesn't turn into a good chip, they can go get other chips and put them in these data centers.
Yeah, that's
right. There's no obligation that
No
they have to use your chips. And,
That's right.
and like you said, you're looking at this as an opportunistic equity investment. The other thing I would say
And
here,
we've made some great investments. I
Right.
got to put it out there.
Right.
We invested in XAI.
yeah.
We invested in CoreWeave.
incredible.
Yeah. How smart was that?
Yeah. As I go back to this, the other fundamental thing, it seems to me, is, you're putting it out there. You're saying this is what we're doing. And the underlying economic substance here, right? It's not that you're just somehow sending revenues back and forth between the two companies. We got people sending money every month for ChatGPT, 1.5 billion monthly users using the product. You just said every enterprise in the world is either going to do this or they will die. Every sovereign views this as existential to their national security and economic security as nuclear power was.
What person, company, or nation says intelligence is basically optional for us?
Right.
I mean, it's fundamental to them.
Well,
It's the automation of intelligence.
I beat the demand question to death. So let's jump in a little bit to system design, and I'm going to turn to Clark here in a second on that. But in 2024, you switched to your annual release cycle, right, with Hopper. You then had a massive upgrade, which required, significant data center overhaul with Grace Blackwell in 2025. And in the back half of 26, we're going to get Vera Rubin. 27, we'll get Ultra, and 28, Feynman. How is the annual release cycle going? Okay. What were the main goals of going to an annual release cycle? And did AI inside NVIDIA allow you to execute the annual release cycle?
Yeah, the answer is yes on the last question. Without it, NVIDIA's velocity, our pace, our scale would be limited. And so without AI these days, it's just simply not possible to build what we built. Now, why do we do it? There's something that, remember, Eddie said it at his earnings call or his conference. Satya has said it. Sam has said it. The token generation rate is going up exponentially.
Yeah.
And the customer use is going up exponentially. I think they were at 800 million weekly active users or something like that.
Yes.
I mean, that's
At
less than
OpenAI.
2 years from ChatGPT, right?
And each of those users is generating massively more tokens because they're using inference time reasoning.
That's right. Exactly. And so the first thing is, because the token generation rate is going up so incredibly, 2 exponentials on top of each other, we have to, unless we increase the performance at incredible rates, the cost of token generation will keep growing because Moore's law is dead, right? Because transistors basically cost the same every single year now. And power is largely the same. And between those 2 fundamental laws, unless we come up with new technologies to drive the cost down, even if there's a slight difference in growth, you give somebody a discount of a few percent, how's that going to make up for 2 exponentials? And so we have to increase our performance annually at a pace that keeps up with that exponential. So in the case of going from Kepler to all the way to Kepler, all the way to Hopper was probably 100,000x. That was the beginning of the AI journey for NVIDIA. 100,000x in 10 years. Okay, between Hopper and Blackwell, we increased, because of NVLink 72, 30x. In 1 year. And then we'll get another X factor again with Rubin. And then we'll get another X factor with Feynman. And the way we do that is because the transistors aren't really helping us very much, right? Moore's law is largely, the density is going up, but the performance is not. And so if that's the case, one of the challenges that we have to do is we have to break the entire problem down at the system level and change every chip at the same time and all the software stack and all the systems all at the same time. The ultimate extreme co-design. Nobody's ever co-designed at this level before. We change the CPU, revolutionize the CPU, a GPU, the networking chip, the NVLink scale up, the Spectrum X scale out. I heard somebody said, oh yeah, it's just Ethernet. Yeah, right. Okay, so Spectrum X Ethernet is not just Ethernet, and people are starting to discover, oh my God, the X factors is pretty incredible. You know, NVIDIA's Ethernet business, the just Ethernet business, is the fastest growing Ethernet business in the world.
Yeah.
And so scale out. And of course, now we have to build even larger systems, so we scale across multiple AI factories connected together. And then we do this at an annual pace. And so we now have an exponential of exponentials going ourselves from technology, and that allows our customers to drive the cost of tokens down, keep making those tokens smarter and smarter with pre-training and post-training and thinking. And as a result, when the AI gets smarter, they get more used. When they get more used, they're going to grow exponentially.
For people who may not be as familiar,
Yeah.
what does extreme co-design
Extreme
mean?
co-design means that you have to optimize the model, algorithm, system, and chip at the same time. You have to innovate outside the box.
Right.
Because Moore's law said you just have to keep making the CPU faster and faster. Everything got faster. You were innovating within a box. Just make that chip faster.
Yeah.
Well, if that chip doesn't go any faster, then what are you going to do? Innovate outside the box. And so NVIDIA really changed things because we did two things. We invented CUDA, invented GPUs, and we invented the idea of co-design at a very large scale. That's why there's all these industries we're in. We're creating all these libraries and co-design. Number one, full stack. Extreme is even beyond software and GPUs. It's now at the data center level, switches and networking and, you know, all of that software in the switches and the networking and the NICs, the scale up, the scale out, optimizing across all of that. As a result of that, Blackwell to Hopper is 30x. No Moore's law could possibly achieve that.
Right.
And so that's extreme.
And that comes
Extreme
from the
co-design.
extreme co-design.
That's because NVIDIA has, that's why we got into networking and switching and scale up and scale out and scale across and building CPUs and building GPUs and building NICs. You know, that's the reason why NVIDIA is so rich in software and people, we check in more open source software in the world than just about anybody except one other company. I think it's AI2 or something like that. And so we have such enormous richness of software, and that's just in AI. Don't forget computer graphics and digital biology and autonomous vehicles, and you know the amount of software we produce as a company is incredible. That allows us to do deep and extreme co-design.
I heard from one of your competitors, you know, yes, he's doing this because it helps drive down the cost of token generation, but at the same time, your annual release cycle makes it almost impossible for your competitors to keep up. The supply chain gets locked up more because you're giving 3-year visibility to your supply chain. So now the supply chain has confidence as to what they can build to.
Well,
so
Brad,
do you
think about this? Wait, before you ask the question, think about this. In order for us to do several $100 billion a year of AI infrastructure build out,
Yes.
think about how much capacity we had to go start a year ago.
Yes.
We're talking about building hundreds of billions of dollars of wafer starts and DRAM buys. And are you guys talking?
Yeah.
This is now at a scale that hardly any company can keep up
So
with.
would you say your competitive moat is greater today than it was 3 years ago?
Yeah, you know, first of all, there's just more competition than ever before, but it's harder than ever before. And the reason why I say that is because wafer costs are getting higher, which means that unless you do co-design at an extreme scale, you're just not going to be able to deliver the X factor growth. Number one, and so you know, unless you're working on 6, 7, 8 chips a year,
Right.
that's an amazing thing. It's not about building an ASIC; it's about building an AI factory.
System.
And this system has a lot of chips in it, and they're all co-designed. And together they deliver that, you know, that 10x factor that we get almost regularly. Okay, so number one, the co-design is extreme. The second thing is that the scale is extreme. When your customers deploy a gigawatt, that's 400,000, 500,000 GPUs.
Right.
Getting 500,000 GPUs to work together is a miracle. I mean, it's just a miracle. And so your customers are taking an enormous risk on you to go buy all of this. You got to ask yourself, what customer would place a $50 billion PO on an architecture.
Right.
Who
On
would
an
be-
unproven architecture.
That's right. A new one.
Right. A new architecture.
Yeah, you just taped out a whole new chip. You're as excited as you are about it,
Right.
and everybody's excited for you. And you just show the first silicon.
Right.
Who's going to give you $50 billion PO?
Right.
And why would you start $50 billion worth of wafers for a chip that just taped out? But for NVIDIA, we could do that because our architecture is so proven. So the scale of our customers is so incredible. Now the scale of our supply chain is incredible.
Right.
Who's going to start all of that stuff, pre-build all of that stuff for a company unless they know that NVIDIA can deliver through? Isn't that right?
100%.
And they believe that we can deliver through to all of the customers around the world. They're willing to start several $100 billion at a time. This is the scale's incredible.
To that point, one of the biggest key debates and controversies in the world is this question of GPUs versus ASICs. Google's TPUs, Amazon's Trainium, and it seems like everyone from ARM to OpenAI to Anthropic are, rumored to be building one. Last year you said, we're building systems, not chips, and you're driving performance through every single part of that stack. You also said that many of these projects may never get to production scale. But given like the seeming...
Most of them.
Most of them. Given the seeming success of Google's TPUs, how are you thinking about this evolving landscape today?
Yeah.
And,
First of all, the advantage that Google had is foresight. Remember, they started TPU-1 before everything started. This is no different than a startup. You're supposed to build a startup. You're supposed to create a startup before the market grows. You're not supposed to come up as a startup when the market's $1 trillion large. This fallacy, and all VCs know this fallacy that a large market, if you could just take a few percent market share, you could be a giant company.
Right.
That's actually fundamentally wrong.
Yeah.
You're supposed to take 100% of a tiny company, a tiny industry, which is what NVIDIA did, right? Which is what TPUs did. There were only the two of us.
But you better hope that industry gets really big. You're
That's
creating an industry.
That's right.
Right.
That's
and I mean, the NVIDIA story, which
and so
is...
that's the challenge for people who are building ASICs now. It looks like a juicy market, but remember this juicy market has evolved from a chip called a GPU to I just described an AI factory, and you guys just saw I just announced a chip called CPX for context processing and diffusion video generation, a very specialized workload, but an important workload inside a data center. I just preluded to maybe AI data processing processors because guess what? You need long-term memory, you need short-term memory. The KV cache processing is really intense. AI memory is a big deal. You kind of like your AI to have good memory, and just dealing with all the KV caching around the system, really complicated stuff. Maybe it wants to have a specialized processor. Maybe there's other things, right? So you see that NVIDIA's our viewpoint is now not GPU. Our viewpoint is looking at the entire AI infrastructure and what does it take for these incredible companies to get all of their workload through it, which is diverse and changing. Look at the transformer. The transformer architecture is changing incredibly. If not for the fact that CUDA is easy to operate on and iterate on, how do they try all of their vast number of experiments to decide which one of the transformer versions, what kind of attention algorithm to use? How do you disaggregate? CUDA helps you do all that because it's so programmable. And so the way to think about our business now is you look at when all of these ASIC companies or ASIC projects start 3, 4, 5 years ago, I got to tell you, that industry was super adorable and simple. There was a GPU involved.
Right.
But now it's giant and complex. And in another 2 years, it's going to be completely massive. The scale is going to be so large. And so I think that the battle of getting into a very large market as a nascent player is just hard, as you guys know.
Even for the customers who perhaps are successful with ASICs, isn't there an optimal balance in their compute fleet? Like it's, I think investors are very much binary creatures. They just want a yes or no, black and white answer. But even if you get the ASIC to work, isn't there an optimal balance because you think I'm buying the NVIDIA platform. CPX is going to come out for prefill for video generation, maybe a decode, a platform.
A video transcoder.
Exactly.
Yeah.
So there will be like many different chips or parts to add to the NVIDIA ecosystem, accelerated compute fleet, right? As new workloads are born.
That's right.
And, people trying to tape out new chips today are not really anticipating what's happening a year from now. They're just trying to get a chip to work.
That's right.
Said another way, Google's a big GPU customer.
Google's a big GPU customer. If you look at, and Google's a very special case.
Right.
I mean, we just have to, show respect where respect is really deserved. I mean, TPU is on TPU 7.
Yes.
Right. And so, and it's a challenge for them as well. Right. And so the work that they do is incredibly hard. So I think the first thing to let me do it, remember there are three categories of chips. There's the category of chips that are architectural, x86 CPUs, ARM CPUs, NVIDIA GPUs, architectural. And it has an ecosystem above. And the architecture allows, has rich IP and rich ecosystem, very complicated technology. It's built by the owners like us, okay? There's ASICs. I worked for the original company, LSI Logic, who invented the idea of ASICs. As you know, LSI Logic is not here anymore. Right. And the reason for that is because ASICs is really fantastic when the market size is not very large. It's easy to have somebody be a contractor to help you put the packaging of all that stuff together and do the manufacturing on your behalf, and they charge you 50, 60 points of margin. But when the market gets large for an ASIC, there's a new way of doing things called COT, customer-owned tooling. And who would do something like that? Apple's smartphone chip, the volume is so large, they would never go pay somebody else 50, 60% gross margin to be an ASIC. They do customer-owned tooling. And so where will TPUs go when it becomes a large business? Customer-owned tooling. There's no question about it. And so, but there's a place for ASICs. Video transcoders will never be too large. SmartNICs will never be too large. And so when there's 10, 12, 15 ASIC projects going on at an ASIC company, I'm not surprised by that. Because there are probably 5 SmartNICs and 4 transcoders. Right. Are they all AI chips? Of course not, And if somebody were to build an embedding processor for a specific recommender system, and that was an ASIC, of course you could do that. But would you do that as the fundamental compute engine for AI that's changing all the time? You've got low latency workload, you got high throughput workload, you have token generation for chat, you have thinking workload, you have AI video generation workload. Is there now you're talking about
that's
the
workhorse backbone of your accelerated
That's what
compute
NVIDIA is all
platform.
about. Yeah.
Again, dumb this down. It's like playing chess and checkers, right? The fact of the matter is the folks who are starting ASICs today, whether it's Trainium or whether it's some of these other inference accelerators, et cetera, they're building a chip that's a component of a much larger machine. You've built a very sophisticated system, platform, factory, whatever you want to call it. And now you're opening up a little bit, right? So you mentioned CPX GPU, right? That is, it seems to me that in some ways you're disaggregating the workloads to the best slice of the hardware for that particular demand.
And look what we did. We announced this thing called Dynamo,
right?
Disaggregated AI workload orchestration, and we open sourced it because the future AI factory is disaggregated.
Right. And you launched NV Fusion.
Yeah.
That even said to your competitors.
Yeah.
Including Intel, which you just invested in.
That's right.
The way in which you participate in this factory that we're building, because nobody else is crazy enough to try to build the entire factory, but you can plug into that if you have a product that's good enough, compelling enough that the end user says, hey, we want to use this instead of an ARM GPU, or we want to use this instead of your inference accelerator, et cetera. Is that correct?
Yeah, we're delighted to connect you in. Yeah.
Tell us a little bit more.
NVLink Fusion, such a great idea. And we're so happy to partner with Intel on that. It takes the Intel ecosystem. Most of the world's enterprise still runs on Intel. It takes the Intel ecosystem, takes the NVIDIA AI ecosystem, accelerated computing, and we fused it together.
Right.
And we did that with ARM, right? And there's several others we're going to be doing it with. And that opens up opportunities for both of us. It's a win for both of us. Great win. I'll be a large customer of theirs, and they're going to expose us to a much, much larger market opportunity.
Yeah.